The UK economy is performing well, much better than many commentators would have expected. It had been reliant on the household sector, but that's now broadening out into business spending, and that bodes well for the future. The UK equity market performed very well in 2013, generating returns of around about 20%. So far this year, returns have been flat, but investor sentiment is still upbeat, and that's been manifested by an increase in IPO activity and smaller and perhaps lower quality names performing better. I think it's worth remembering that the UK is a very international market, so those companies exposed to emerging markets have suffered a little bit more recently. Also, those companies with sales in the US have been impacted by the weakness in the dollar if they report in sterling, but otherwise companies are progressing well. It's becoming more difficult to find value at the moment, and I struggle with some of the ratings of the high growth companies. A number of the largest companies have embarked on shareholder-friendly strategies such as BHP Billiton, and I think it's those companies that are most interesting from a valuation perspective at the moment. Turnover in the trust is normally very modest, and this period hasn't been any different, but we have added one new holding, which is Verizon Communications, received as part of the sale of Vodafone's holding in Verizon Wireless. We think Verizon Communications has some interesting opportunities in the US and is attractively valued. We aim for a sensibly diversified portfolio, but have a bias towards the sectors in the market that have higher yields, so that would include banks, oils, utilities, tobacco and food producers. But we're careful to ensure that not more than around about 5% of either income or capital is exposed to any one company. UK companies are attractive given their international diversification, so they have a lot of experience of operating abroad, particularly in fast-growing emerging markets. They're attractive for their intellectual property, such as strong brands and patents, also for their ability to use skilled human capital. And it's worth remembering that companies operate within a very strong framework of corporate and legal governance. And in the UK, the dividend income culture is very strong. Over the long term, dividends and their reinvestment generate a very significant proportion of total returns. And we think if you want to invest successfully through the cycle, you have to maintain a laser focus on companies that can grow their earnings and hence their dividends over the long term. And we think the best way to do that is to invest in good quality companies, so companies with robust competitive positions, with strong management teams and with healthy financial characteristics.